Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, March 30th, 2020, and we again find ourselves in the final hour of the trading day. I mention this each day, but I think it's worth repeating. In my opinion, the most valid time to make your buying and selling decisions for the day is right at the end of the day, just as close to the close as you can get. During the day, you have the algorithms, the day traders. They're battling out, they're fighting it out. They're not doing it with a lot of size and a lot of volume. At the end of the day, you have the large financial institutions come in. They're coming in with size. They have very smart people. They're dealing with the most money. They have the best technology. And at the end of the day, they make their move and they start taking the price control away from the day traders and the algorithms. And in my opinion, they are moving it to the most valid prices of the day. So that is why I like to make the majority of my buying and selling decisions right near the close, as close to the close as possible, and piggyback alongside the large financial institutions, what they're doing at the end of the day. So first trading day of the week. I hope we all have a good week. Let's make sure we have a plan for every trade. Let's make sure we follow that plan. We position size correctly, get as close as we can to our stop below us, and get out if we're wrong. If it moves up, then go ahead and be patient with it. Have the courage to stick with it while it's going up. So in my opinion, that is the key to successful trading. So anyway, thank you for coming today. I appreciate seeing everybody. I always really honestly do look forward to seeing everybody. I think we have such a great group. We have we have people in the group that have such great comments and insights and poems and updates from around the world. So I really do appreciate in my life having this podcast and having such a great group that we can kind of hang out here in the last hour of the day. So thanks for that. I do appreciate it. Hey, Kamal, good to see you, my friend. Always nice to have Kamal here. Hope you're doing well. Miko25, good afternoon to you. Looking forward to our lesson tonight at 6:30 p.m. Mountain Time, which is 5:30 yours, right? I think that's what I have down. So looking forward to that. Looking forward to our second lessons. Hello, Dan. Good to see you, my friend. Always nice to have you here. Hope everybody had a good weekend, was safe. All right. Well, we're having a good day today. The Dow Jones is up 540 points, up 2.5%. Which ironically would be a monster day in normal times, but this is kind of just an average day, interestingly enough. NASDAQ is up 232 points, up about just a little over 3%, and the S&P is up 73 points, up 2.88. So glad to see a green day. Boy, it's been volatile lately, hasn't it? With this up and down, it's up and down. So who knows? I actually was reading an article on the VIX yesterday, and, with the VIX being over 60, that implies for the next 30 days, we are going to have price movements of between 4 and 6% per day, either up or down for the next 30 days. If you look at the structure of the VIX going out 30, 60, 90 days, the market, at least in the VIX, it's in backwardization right now, meaning that these months in the futures have lower prices than they do now, which, could be a good sign that, people that are trading the VIX are thinking that volatility will decrease in the coming months. But we don't know that for sure. But that's just what the structure of the VIX means right now, with the future months being priced lower than the current month, which is called backwardization. And if it's the opposite, it is called contango, where you have the prices at a higher price in the future than they are now. So anyway, just a little something to divine and take a look at. And so I thought it was kind of interesting. So anyway, all right, let's take a look here. Miko says, I am as well. Good. Me too. Brian is here. Hello, everyone. Pretty crazy Monday. Hey, Brian. Yes, it is. Hope you're doing well, my friend. Brian says, at least for me. Why? What do you have going on, Brian? And Christopher Hitchin is here. Good to see you, Chris. Hope you're having a nice evening. I hope everything is well in England for you. All right. Well, listen, here is the plan for today. As usual, we're going to start off with the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them moving forward. I have a variety of positions on here at the moment. I've sold some puts. I've bought some calls. I have some directional trades. Feel pretty good actually about the combination of trades that I have. In my opinion, it's not only is it important to vary up and have some diversification in the types of stock industries of the equities that you own, but also to have a variety of stock trading approaches. I don't want to be too correlated with stock positions, and I don't want to have my stock trading approaches be all the same either. I want to give some a little bit more room, some a little less room, and that's why I have directional positions. Also have puts, calls, so forth. So we're going to talk about that. Then a few of you have some trades on that you've been kind enough to share, and we will be going over those as well. After that, I always like to do a few minutes on trader psychology. I think it's very important. You hear me talk about this every day and hit you over the head every day with it. But again, it is important to learn how to trade. It is important to identify support levels and resistance levels and entry levels and exit levels, all this kind of stuff. It is very important because you have to know those things to be able to put together a plan. But once you have a plan, it's a whole other challenge in order to follow that plan. And really, you're going to put yourself in the best position to be a profitable trader if you can come up with a good plan. It doesn't have to be the best plan in the world. It just has to be solid, small losses, potential large wins, but then you have to follow it. And where most people get in trouble is they position size too large, and that makes it tough to follow the plan because your emotions get ramped up, they get amplified. If you have a profit, oh, I want to take it, or if you have a loss, oh, I want to take the loss, even though your plan doesn't tell you to. So it's very important to follow your plan, and that's why I do like to touch on trader psychology every day. Then when we're done with that, we're going to go down through my watch list one by one. I've already gone through a few of them before the podcast started, but I do have 3 requirements before I take any trade. And they're all, you need 3 of them. I mean, you need these 3, you really do. And the first one is, from a technical standpoint, I want to make sure that I have a confluence or a combination of indicators lining up. I look at each indicator like MACD and RSI and moving averages, ATR channels, divergences, all this kind of stuff. I look at these as potential groups of buyers on my screen, not necessarily just lines and numbers. And you'll put yourself in the best position to have a profitable trade if you're in the company with as many other buyers as possible. So if one moving average is a group of buyers and an RSI level is a group of buyers, well, if those two line up together at the same time, then you theoretically potentially have 2 groups of buyers. And again, the more buyers, the better. It doesn't mean you're going to have a profitable trade, but the more buyers, the better. So I like to look for a confluence or a combination of indicators lining up. Ideally, not just on one time frame, but on 2 time frames. It's always important to look at the time frame above you. Like if you're making your entries on the daily, taking a look at the weekly and seeing how that looks as well. So that's requirement number 1. Requirement number 2, you have to have a good risk to reward ratio. You can have a great setup, but it may be at a place in the chart where the RSI is too high, or it's too high as far as ATR channels, or there's some significant resistance above you, whether it's RSI or a major moving average above you. So look for that confluence of indicators lining up, but then you also have to make sure you have a solid plan and well-informed decision about looking at the support underneath you and the resistance above. So, as a general rule, if I'm going to risk $100, I want to be able to make at least $200 or more to the upside with reasonable levels above. I mean, I guess what I mean is that, you can say, how I'm going to risk $100, make $1 million. Okay, pretty good risk to reward level, but it may not be very realistic. So it has to be realistic for the price to get up to your profit target compared to what you're risking to the downside. And then number 3, extremely important, really important, are 2 things. One, not having too many correlated positions, meaning that you don't want to have 3 or 4 or 5 tech stocks at one time, because if it goes up, you're doing great, but if it goes down, then you're getting hit 3, 4, or 5 times as hard. You want to make sure you have a diversification in the type of industries and the type of stocks and securities that you buy. Maybe one tech stock, maybe one healthcare stock, maybe one auto stock, maybe one industrial stock. Ideally, having some oil or gold or bonds, something outside of equities, is good as well. So it's important, like I said before, that you diversify in the amount of stocks you have, the amount of correlated industries you have, and also your approaches should be uncorrelated. You should have different stock trading approaches. So, and then account heat, extremely important. I do not put at risk, even if I had 6 completely uncorrelated positions, I never buy more or put at risk more than 60% of my capital, even if completely uncorrelated positions. And that's a rule that Steve Burns taught me a couple years ago, really resonated with me, and has made a huge difference in this year. This year has been tough, but it would have been a lot tougher had I had 100% account heat. So I'm very grateful for that. So anyway, going to look through, use those 3 requirements. We're going to go through the list. I'll mark off a few potential candidates. At the end of the day, I'll get the fine-tooth comb out. We'll go through those potential candidates. Ideally, I'd like to really narrow it down to 1, 2 at the max. 2 is about the maximum I want to take each day. So that's that. And then if I find something that really qualifies at the end of the day, I'll go ahead and make that purchase right before the market closes. Then after the market closes, if anybody has any questions for me, please let me know. Happy to answer them. Happy to clarify any questions that you have. If you'd like me to take a look at any stock symbols, just put them in the chat. I'm happy to give you my humble opinion on them. If you do have a stock symbol that you think would be helpful for the group, or interesting pattern that you'd like me to go over before the market closes, please put a star by it, and I'll do my very best to break that chart down before the market closes. So that's the plan for today. So if you could, please hold tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, Brian says, my USO calls that I bought are down so far. Yes, oil has definitely gone down, although, speaking of oil, look at USO on the 5-minute chart here. I was noticing about, 40 minutes or so ago, we were just down, 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 down. But look at this huge 5-minute bar, just exploded to the upside on this a huge amount of volume. So, I like to look at a stock and look for some kind of indication with the price action that something has changed. Well, maybe something did change here, right? I mean, that's a tremendous amount of volume intraday, and obviously a huge bar. Man, it took out 3 or 4 or 5 ATR channels at one point. Now we're consolidating, but that was a bullish sign, if that makes you feel any better, Brian. Yeah, it's interesting. Is oil going to be higher in a year? I don't know. I kind of feel like it's going to. If and when things get back to normal, I don't know. I don't think it's sustainable for oil companies at a $20 price target, but I was just happening to be looking at oil, Brian. So anyway, that definitely helped your position there a little bit for sure. Hey, Mount Doji, good to see you, my friend. Always great to have Mount Doji here. Thanks for coming, bud. Joe Turner, hey, everyone. I think Joe has a poem for us. All right. We are tough traders, sometimes tough as an ox, but we get very cautious when trading our stocks. We are coming into spring and soon it will be autumn. Hopefully by then the market will hit bottom. Thank you, Joe. Always great to have these. Let's give it one more shot. We are tough traders, sometimes tough as an ox, but we get very cautious when trading our stocks. We are coming into spring and soon it will be autumn. Hopefully by then the market will hit bottom. Yes, let's definitely hope by then. Thanks, Joe. Fantastic. Always appreciate the effort that you put into writing these just awesome, great, pertinent poems. Hey, Zach, good to see you. Nice having you here, bud. Hope you had a good weekend. Gamer, hey, Dave, what's going on? Good to see Dave from Colorado. William, thanks, William, for coming. Hello, all. Hello, Greg. Hope you are staying well. Thank you, sir. I appreciate that. I hope you're staying well as well. Mount Doji says, is the 5-minute time frame your favorite if you're looking for intraday positions? You know, it kind of depends, Mount Doji. If I'm 5-minute charts actually happen faster, they play out faster. You know, a lot of the time I use 39-minute charts, but problem is with the podcast is I don't want to put on too many 39-minute chart positions because then I have to monitor them and it takes my attention away from the podcast. So 5-minute ones play out better. You know, there's pluses and minuses to everything. I like 39-minute bars. They're not too long, they're not too short, and then you get exactly 10 bars per day because 390 minutes in the trading day. Steve Burns, hey buddy, good to see you, my friend. Thank you for coming by. It's always nice to have you here. Always an honor and a privilege to be able to have you in the chat, Steve. I really do appreciate it. I know everyone else does. Steve says, USO and ERX at our prices I never thought I would see. Same here, Steve. I mean, it's unbelievable. It's unbelievable. I mean, I think at this point either oil's going to completely go away or it's going to rally in the future. I don't know. I mean, logically, I would think that if and when things get back to normal, obviously there's going to be more demand for oil, but you know, there's a lot of tricky things going on with oil, geopolitical things, you know, lots of supply, no demand at the moment. It's hard to say, isn't it? Hey, Frank, good to see you. Always great to have Frank here. Hope you had a good weekend, my friend. Okay, well, let's get to it. Like I said, I do have a variety of trades here, so let's start out with gold. So I did buy gold back here on the 26th of March. I bought it when we had a 5 EMA cross over the 20 EMA. This is a good back-tested approach to trading gold. Of course, every trade doesn't work, but over the long run, from the past till current, it has had a nice edge. And the nice thing about moving average crossover trades is what they do is they allow you, they're just kind of designed that way to, if you're wrong, being wrong small and giving you the potential to have a big upside move. And that, you know, that's the dynamic you need in trading. But I did buy it here at 153.75. I bought a half position. We are over the 200-day moving average, but I still did buy a half position because the volatility has been so high. It's basically moved sideways since I bought it. It is down just a touch today, 38 cents today. But, you know, first of all, to the downside, my exit on this, my stop loss, I'm using a 50-50 stop loss on this approach. If the price closes below both the 5 and the 20, I will get out of half the position. If the 5 crosses below the 20, I will get out of the second half of the position. I just want some diversification on my exits there. So that's to the downside. To the upside, my initial profit target is the 70 RSI. If it rejects the 70, I would go ahead and just get out. Conversely, if we have a huge gap up and a big down reversal bar and a lot of volume, close lower than the open kind of situation, I could also use that as a signal to get out as a volatility signal. So anyway, slightly down on this trade, not too much. Is holding the gap up. You know, we gapped from here to here. It is holding that low. It has held it for 3 days, which you know, some say is a really good sign. I mean, from a back test perspective, it has shown it's a good sign that it does have an edge, but we'll see. I mean, we're consolidating up here in this higher range. You know, you could consider this a bull flag if it breaks out to the upside, but we shall see. But that's a directional trade. SPY. All right, world famous SPY trade. So I know all of you hear this each day. I apologize, but in case we have some new viewers, I do want to kind of, uh, you know, explain to them why I take this trade every day. But I do buy the SPY every day at the close. I hold it overnight. I sell it the first thing the next morning. This is based upon a back study from Liz Ann Saunders. It's all the way from 1993. She's at Bespoke Invest on Twitter. But with this back test, they used two approaches. First approach was buying the SPY at the open each morning, holding it through the day, selling it at the close. If you would have used this approach every day since 1993, you'd have returned a negative 13.9% return for all your troubles and hard work. However, if you did the opposite, which is what I do, and buy the SPY at the close, hold it overnight, sell it the first thing the next morning. If you did this every day since 1993, you would return a positive 634.2% return. Past performance is no guarantee of future results. I have no idea what's going to happen in the future. All I can look and is at the back test, and if I'm going to allocate capital towards something, of course I don't know what's going to happen in the future, but I would much rather allocate capital towards something that has worked well in the past. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see, at least to date, the buy in the afternoon, hold overnight, sell in the morning has had much better results than the opposite. It has had a nice smooth equity curve if you look from the start till now, but in between there can be some rocky roads. There's going to be some significant drawdowns. 2019 was a great year for this approach. 2020 has been horrible, right? So I have to look at this the long term. I position size very conservatively, maximum 10% of my position size. So, if we run into a time like we have over the past month and a half, and I had not position size conservatively, I would have got walloped. But because it's a 10% position size, yeah, it hurts, but it's not career ending, right? So with that being said, I did buy SPY Friday at the close at 253.42. I sold it this morning at 255.68. So couple bucks, a little more than a couple bucks overnight on the SPY, which is really great. It's higher than the open, but that's okay. That was the plan. I have only been taking a quarter position size, one, because we're underneath the 200-day, and two, because the volatility has gotten so large compared to regular times, right? Air quotes, regular times. So anyway, grateful that I had a positive trade on that. I will be selling this I will be buying this again at the end of the day, holding it overnight, selling it first thing the next morning. All right, XLF. I did buy XLF. This is another directional trade. I bought it here March 24th. Really nice setup here. A lot of confluence of signals. Earlier I was talking about confluence of signals. Well, this had a lot. Starting off, we went under 30, closed over 30. Second, we went under the negative third ATR channel, closed over the negative third ATR channel. That is also positive. We had a nice V2 formation. Here's day one, here's day two. Here's day three. Day two washes out day one. Day three closes above day one. We had some increased volume on the upside, and to top it off, we had a false breakout to the downside. Here we came down. Here's the low of the range. We came back up in the range. We broke to a new low here and immediately went back up. And I love false breakouts that just dip their toe into that new lower range and come right back up. So I did buy it here at 1897. Right now it is at 2130. I've held this for 1, 2, 3, 4 days. I did take a profit target here the next day. Did take a profit target again the next day. You can see here's my profit target here, about 2185. I don't know if it's going to hit that, but so far so good, up about 7% on this trade. So I'm grateful for that. My initial profit target here would be a rejection of the 50 RSI. It has moved more than one ATR for my entry, so if I get a close below the previous day's low, that will be my signal to go ahead and lock in profits. Okay, those are the directional trades. I did buy calls on Apple expiring June of 2021, so 12, 13, 14, 15 months from now. They're Apple $250 calls right now. We're at 253.05, so they're considered in the money. I don't buy a lot of calls, but in this market with some of these big names being down so much, I am happy to go ahead and buy a call, risk some premium. It's a defined premium, so I can only risk as much as the option that I bought. It does give me a good risk to reward ratio. Currently, my trade plan for this is last week we had a V1. Here's day one, day two. Day two bounced off the 100-week moving average, also formed the V2. If it closes below halfway of this bar, I will just go ahead, sell the calls, take a loss, move on. To the upside, if we reject the 1 ATR channel on the weekly, I will go ahead and take profits up there. So that's the plan, right? Good risk to reward ratio. I can only lose a defined amount. And like I said, I don't do a lot with calls, but in this particular market, it did make sense to me to have some time on my hand to buy some of the best companies in the world. Disney. All right, so Disney. I did sell puts down to $50, meaning these expire January of 21, right? So I have about 9 months. If Disney stays above the $50 level, I will be able to keep all the premium, which is $375 per contract. If it comes down here, I will be required to buy it at 50, but I actually don't have too much of a problem buying the stock at $50 plus keeping all the premium as well. I picked $50 for a couple reasons. On the yearly, it's right in the middle of the value zone, right at the midline. Theoretically, it could act as some support there. I like the round $50 number. On the quarterly chart, we have support here at the negative third ATR channel. So when I sell puts, I like to look at major support levels, not on one time frame, but on three. On the monthly chart, we have support of the 200-month moving average and also the 250 days. So anyway, I'm up nicely on this particular trade, and we'll see what happens. Lastly, the Qs. I did sell puts on the Qs down to $130, expiring June of this year. So a few months from now. It paid $350 in premium, which was pretty dang good. It was close to somewhere between 8 and 10% on an annualized basis. If the price stays above 130, I will be able to keep all the premium. If it goes below, I'll be required to buy it here at 130, and I'll just have to decide what to do then, as far as either getting out of the trade or just getting put the stock and managing the trade. The $130 mark, we have some support. We have the 10-year moving average above us as support on the weekly, have the negative 1 ATR channel below on the monthly, third ATR channel. So again, it lines up well on multiple time frames at that $130 price. Okay, let's take a look over here. So Steve Burns bought the same signal that I did on gold. He went with the UGL, which is the double leverage gold. He bought this here 56.28 back on the 26th with the 520 crossover. Only difference between his and mine is that mine is the regular gold, his is the double leverage. So it is down a little bit, but I believe Steve's trade plan is to get out with the 5 crossing under the 20. So anyway, down a little bit on this, but it is double leverage, so it seems a little higher. Bing He took a nice trade on the March 27th, took it at 175.05. It was up higher. This is on Clorox. It was up higher, but he still is profitable on that, still is above the 50 RSI. So make sure, Bing He, that you have a trade plan for that, but I'm glad to see that. Look at Bing He with Netflix. Bing He bought the March 27th, bought it at 363.90, and today it's at 372.82, up 4.45%. Looks like it might close above the 1 ATR channel. It's above the 50 RSI. MACD is positive. So congratulations, Bing He. Proud of you, my friend. Okay. Hey, Marco, good to see you, my friend. Always nice to have you here. Hope you're having a nice evening in Slovenia. Thanks for being part of our group. Hi, Bing He. I just talked about you. Just talked about your trades on Clorox and Netflix. So congratulations, my friend. Frank says there is a huge generational shift that rejects owning any fossil fuel stocks, especially university endowment funds. That is true. That is definitely true, Frank. William says, regarding oil, Putin agreed to the need to stabilize oil prices. This may be the cause of the jump in the prices you observed. Yeah, I saw a little bit of news on oil that maybe they were talking about it at some level of government, and yeah, that may have been the reason, but that was a monster. Steve says the oil sector is where money is going to die. Yeah, well, that's what everybody's saying for sure. I mean, boy, you look at some of the oil ETFs and energy ETFs. Boy, what was it, Steve? ERX was down to a penny stock. Oh my gosh. He says, is it possible for an ETF like USO to go to zero? I am looking to get USO when the price starts to stabilize. I honestly don't know. Oh, good. Steve's bailing me out. They will reverse split it like they recently did with ERX. It will not go to zero as it will be recapitalized to continue as an ETF. Yeah, that makes sense. I can't see oil going to zero, but yes, if it gets too low, they'll reverse split it so it doesn't. So the price looks. They'll give you fewer. They give you double the shares. They'll take half the shares and increase the price double. Steve says the contango of rolling oil futures is a cost in U.S. oil as well. That's right. That's right. It always goes up because of the front months are going to get more expensive, then it could come back down. Steve says, look at the dividends on oil stocks, unbelievable yield. Yeah, like if we look at Exxon, 9.41% yield, just the yield of Exxon. But scary, right? Are they going to be able to pay their dividend going forward? I don't know. I don't think Exxon's ever missed a dividend payment, but I guess there's a first time for everything. So listen, before we go through my watch list, before we look for the 3 requirements that I need to possibly enter a trade at the end of the day, which are, again, confluence or combination of signals. Number 2, good risk to reward ratio. 3, make sure you don't have too many correlated positions and also too much account heat. But before we get to that, this is the time of the day where I do like to talk about trader psychology. There's some really good Facebook and Twitter pages out there, put out some really good information, mainly on trading psychology, getting hold of your emotions. And today's is Julian Komar at blog Julian Komar on Twitter. He has some really, really good posts. I would suggest that you follow him, subscribe to his channel, read his information. It really is good stuff, and I think it will be helpful. So thank you for posting this, Julian. So here are the top 5 quotes from William O'Neill. And if you don't know who William O'Neill is, he started Investors Business Daily. He's featured in Market Wizards, author of is it How to Trade Stocks? I think that's the name. I think that's the name of the book. I've read it many times. I should know, but anyway, I'm going to go over these. I actually have another easier to read one here, but here we go. 5 must-read quotes from William O'Neill. Number 1. Letting losses run is the most serious mistake made by most investors. We talk about this all the time, right? The reason people blow up their accounts, the stock is on the wrong side of the moving average. They get stubborn. They don't want to sell, and because it's going to be a blow to their ego. But really, the reason most people blow up is exactly what Mr. O'Neill says. Letting losses run is the most serious mistake made by investors. If you have a loss, just go ahead and take it. That first loss is the easiest loss. The larger it gets, the tougher it is to take. And so letting losses run is the most serious mistake made by investors. Number 2, the stock market is not random because strong investor emotions can create trends. Well, we've seen that, right? There's certainly been a lot of emotions, but yeah, that's, emotions create those create trends, and it is not random. People say, it's random, efficient market theory and all that. Well, they're not factoring in the emotions, the fear and the greed. Number 3, if you own a portfolio of stocks, you must learn to sell the worst performers first and keep the best a little longer. Most people want to sell their winners and they want to buy more of their losers. I get it. That's just how people are. But in reality, what he's saying is you're better off selling the worst performance and keeping the ones that are performing well. Number 4, it is one of the great paradoxes of the stock market that what seems too high usually goes higher, and what seems too low usually goes lower. Isn't that the truth? Right? That is the truth. Like oil, it is very low. Probably most likely it's going to head lower before it heads higher. Just because it's low doesn't mean it has to go up, and just because something is high doesn't mean it has to go down. Last one, I think there's a certain amount of humility with top traders. You have to make enough mistakes and learn to overcome them. That is true. Don't be cocky in this game. If you have a string of winners, don't be cocky. You probably didn't have a lot to do with it. I mean, congratulations that you had it, but you have to realize it could have gone against you just as easily. But I've never met a long-term cocky trader, to be honest with you. You have to have humility. You have to realize that a trade could have gone either way. Be grateful for the trades that do go your way. The ones that don't go your way, just realize it's part of the game. Don't get down on yourself too much if something goes down. Don't get too full of yourself to the upside if it goes up either. But anyway, I thought those were good. I appreciate Julian sharing that. And again, he's at blog Julian Komar or Julian Komar on Twitter. So thank you for that, sir. Appreciate that. And I hope that was helpful for the group. Let's take a look here. Okay. Bing He says, Steve, so USO will eventually go up if we hold long term? I don't know. I guess we'll have to see what Steve says. It doesn't have to. Mount Joji, yeah, I was wondering how quickly could they recapitalize USO. Dan says, O'Neill book, How to Make Money in Stocks. That's right. I've read it many times. How to Make Money in Stocks. It's a great book. Steve says, I'd be a bum on the street with a tin cup if the markets were always efficient. Warren Buffett. There you go. He's talking about efficient market theory. So will USO eventually go up, Bing He? I don't know. You just can't say that. I've seen natural gas stay down for a long period of time. So not necessarily, and like Steve says, you do have to worry about the contango. Frank has a poem. To make money in stocks, you need the right entry. This you must watch with the eyes of a sentry. The entry is king o'er most everything, for it's this that can truly make the register ring. Ah, nice. To make money in stocks, you need the right entry. This you must watch with the eyes of a sentry. The entry is king over most everything, for it's this that can truly make the cash register ring. Thank you, Frank. Always appreciate your great effort and great poems, you and Joe. The entry is king over most everything. Okay, there we go. Steve says USO will go up, but your share count may go down. That's true. USO does not backtest well with any long-term moving average signals. Right. Right. Okay. Let's see what's happening here. All right. Well, let's get moving. We'll go down through, take a look, see if anything qualifies today. Apple, nice day today, up 2.6%. We have really been under the 200, over the 200, under the 200, over the 200. The 200 has really lost its validity as a support level. Anytime you're above and below and above and below, it's lost its stability. I might be interested if we could get down under the 250 and back over the 250, because in the recent past that did hold as support. So I'm not going to take Apple here. I already have a call on Apple. I don't want the diversification, and really the chart has just been above and below the 200. So I'm just going to let Apple go. Adobe, same thing, over the 200, under the 200, over the 200, under the 200. So MACD's positive, which is good, but I just don't see anything there. Amazon up nicely today. We moved up, we moved sideways, consolidation. Now we have moved up here. Don't see a lot of volume yet. You know, it is positive that it's closing above the 50-day moving average, positive that it might be closing above the 50. Now let's look at the weekly. Weekly, we're above all the major moving averages, which is good, but you know, I have Qs right now. I have Apple, so I'm not going to add any more tech here. Boeing, you know, we had this huge move down. We had a huge rally up. We got right close to the 50 RSI, and that is where we stopped. And now we've gone down, which does not surprise me. I mean, this is a bounce in a bear market. Now, in the future, if we could have a nice higher low V2, maybe tomorrow, I might consider that. The people that bought here had a huge gain. As it started to go back down, they started to take the profits. That's part of the reason most likely that we've gone down here. But if we can get another strong group of buyers that come in here on this dip, move it back up with a nice V2 and some nice volume, that might be interesting, but nothing there today. Berkshire Hathaway, same pattern on a lot. We had the low, we had the bounce, and now we've kind of moved sideways, so I don't see anything there either. Beyond Meat, nothing there. Caterpillar, very strong today. You know, we came down, made that bottom, we rallied, then we had this V2. It wasn't a great higher low V2, but that was a good signal when it had the V2, the higher low V2 closed above the 10, and this has moved up nicely. This is one of the few ones that I've seen over 50 RSI, so if it can close over 50 RSI, that is definitely positive. Here we are on the Dow. Of course, we had the huge down move. We have had a bounce. We got near the 50 RSI, which is where I was thinking we would meet some resistance. And today, the last couple days, we've just kind of moved sideways. So I don't see anything here, although we do have a MACD, positive MACD crossover, which is important. But I still think the 50 RSI, which is right about here, close to the 20-day EMA, we're going to have a big thrust up or possibly go back down and test that low. Walt Disney, of course I have. Look, this isn't that bad of a higher low V1, right? We're down, we came up into the value zone, we've had 1 day down, we have rejected the -1 ATR channel and created a V1. Not too bad. Honestly, not too bad. I'm not going to take this because I already have Disney on the puts. But not bad. I mean, here's day one, here's day two. Day two washes out day one, closes above day one's close. I'd like to see it close above the 10-day EMA, which would be nice as well. But again, people that bought here, they rode it up. When it got weak, they sold, and now a new group of buyers came back in. So that one's not too bad. If I did take this trade, I would just get out with the close below halfway of the washout bar. Etsy, don't see anything here. Facebook, strong today for sure, but I'm going to wait for a crossover on Facebook. Here's gold. Of course, I took that with the 520 crossover, just basically moved sideways, but it is off of its lows for the day. Google, boy, strong, 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 although I don't really see any signals here. Goldman Sachs working on a nice little higher low V1. I already have financial ETFs, so I'm not going to add to this, but this is a decent higher low V1 if it closes above day one's close. Home Depot, strong, 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 came off of its lows. It was down 40%. Now we're only down 20%, but I don't really see a valid signal here either. IBB, strong, a little scary with that 200-day moving average right above. Intel, you know, Intel's been wild and woolly. It closed below, closed above, closed below, closed above, rejected the -1 ATR channel. Let's look at the weekly. Has that 50 RSI right above on the weekly, so I'm going to pass on this. Well, I'm not seeing a lot of volume here on the indexes. I'm just not seeing a lot of volume on the up days. Russell, same thing. Johnson & Johnson, sorry, I'm losing my voice. Johnson & Johnson, boy, big move back up from this lower low. Well, now we're back into the value zone, possibly reject the 200-day. I mean, that should act as some kind of support. I would look for a day or two down, look for that higher low V1 or V2 that ideally washes out the 1 ATR channel. I mean, this is a big move, would not be expected, surprised at all if we had a little pullback, and I'd rather buy a V1 or V2 on this. CarMax down 5%. I'd like to buy CarMax back here at this low. We'd have a double bottom with a bullish divergence, but nothing yet today. Coca-Cola, pretty strong day, but I'm not going to buy here. Lockheed Martin, big rally, but you know, we got stopped right here, right about the 50 RSI, which doesn't surprise me whatsoever. So I would wait for a higher low V1 or V2. MasterCard up a little bit today. As with everything else, the low got rejected near the 50 RSI. I did get out of my MasterCard calls that I bought down here, and I sold up here, so that was a nice profitable trade, but I did take those off because my thought was we get up, if we get stuck near the 50 RSI below it, I'm going to get out, and I did, which looks like it was a good idea. McDonald's, same, right back up to the 50. Don't see anything there. Merck, strong day today, very strong day today on some volume, but again, I don't see a good risk to reward there. Microsoft, look at Microsoft, up 6.83% today. Unbelievable. Very, very strong. Getting close to a 520 crossover, so might look at that in the future. Netflix, Bing He, great day, up 4.35% for Bing He. I appreciate you sharing that with us, Bing He. Like to see this close above the 1 ATR channel. This baby may trend on up. Who knows? Nike, nothing really there. Philip Morris, big day today. But again, we were below the 1 ATR channel, back into the value zone. I'm looking for a pullback and a nice V1, V2 that gives me a better risk to reward ratio. I'm not going to buy after this big move up, right up at the 50 RSI. PayPal, nothing much there. Q's, nice strong day. I did sell puts on these, so that's performing well. Silver down 2.38% here, but it is setting up for a possible higher low or a higher low V2 tomorrow, which might be interesting. S&P, very strong, did have the overnight SPY trade. I will buy that today. Teladoc down today. Bonds, V1 to the downside. Look at this. See, day one, day two washed out or went higher than Friday's high. Now it's reversed back below. No trade on that for me. Tesla, don't see anything there either. Twitter, don't see anything. United Airlines down 8.43% today. That's amazing, isn't it? But again, below the 1 ATR channel, back into the value zone. Down, down, down. If we could have a V2 tomorrow that closed back up in the value zone, that would be a good risk to reward ratio, but I just need to be patient on that. Natural gas, nothing really there. UNH rejected the 200-day moving average. I don't see anything on UNH. Gold or oil we talked about. Look at the volume today. Unbelievable. This is a huge amount of volume off of its low, so who knows? Who knows? Let's take a look at that intraday chart that we were looking at earlier. that was massive. Now we're just inside of a range. So nothing on oil. VIX. What is Mr. VIX doing today? It's down 5.23%. So it's well off of its high, but in the value zone. I would not be surprised, to have another move back up here, especially now that we're in the value zone. So, if VIX moves sideways for a while, give me V1, V2, I would take a position in the VIX for possibly challenging those old highs, but who knows. Verizon, strong day. I don't see any setup. Walgreens, don't see any setup. Walmart, close above the 200-day, close above the 50. Not bad. Not bad at all. It would give you a decent risk to reward ratio with the close back under the 200. Has that 100-day moving average. Let's look at the weekly. It's just consolidating here. MACD is crazy, not positive. So, look, it gives a good risk to reward ratio. It is above the 50. It's not too bad, but it's right in the middle of this range. I think I'm just going to let that one go. Energy, a little higher low V1 here. Made the low, came up. Today, we washed out yesterday's low, but I'm not going to buy this. I'd like to see it close back up in the value zone. XLF, of course, I have. That's been a nice trade. Come on, get on up there. 21.86. You can do it, XLF, but this has been a great trade so far. Real estate, moving into the value zone. I'm looking for a pullback, higher low V1, V2. Look at the V bottom on utilities. There's just no way I'm going to buy it here. I need a couple days down before a move back up. Very strong on healthcare, and Zoom video down. So I really honestly do not see anything. Being he said, I think I have a simple thought process where commodity prices such as oil will always fluctuate up and down, and I think oil is something people will always need to have. Yeah, you would think, huh? Steve says, yes, commodities do trend to trade in one direction or the other. Futures probably a better vehicle for trading them. That is what trend followers use. Yeah, they don't use ETFs. They actually use futures. Steve says USO has lost 93.6% of its value. Wow. The USO ETF. Mount Toshi says, woof. Thank you, Steve and Greg. Glenn says, hey, Glenn, good to see you. Glenn says, options on GSX. Oh, opinions. Well, we did have a 520 crossover. I don't know how this backtests, if it even backtests well for GSX. We had some strong volume on that move up for sure. You know, I don't know enough about GSX with the backtest to see whether I would buy this. What I honestly would like to see here at this point, you know, we had this big bar up here. Halfway of this bar would be down in here. If it could come back down into this range, find some support at the 10-day or the 20-day, and then have a V1 entry, that might not be too bad. Let's look at the weekly. A little high on the weekly. It's, you know, it's up above the second ATR channel on the weekly. I really don't have any thoughts here, Glenn, on this one. It's pretty choppy and range bound. Yeah. So, like I said, I am not going to take Disney, but this is a pretty nice higher low V1 in the value zone. Here, you know, we moved up into the value zone, we came back down. Today thoroughly washed out yesterday's low and rejected the -1 ATR channel, and a pretty nice V1 closing above the 10-day, and also MACD being positive. On the weekly, we still have some room up. You know, this is probably something I would be interested in taking, but again, I already have the put, so I'm not going to add any extra on. How's our gold doing? Oh, gold's up. That's good. Goldman Sachs working on a decent little V1 there for sure, right? We were below the 1 ATR channel, into the value zone, had a down day. We've rejected the -1 ATR channel and a V1. Not too bad. But again, I already have financials, so I don't want the correlation. Netflix doing well. XLF. Yeah, all in all, I just don't see anything here that I'm interested in. Take a look at current positions. Gold's up. That's great. SPY, buying that at the end of the day. XLF, get on up there to that profit target. Apple's cranking. Disney's cranking. Yeah, if I did not have the puts on Disney, I would take this nice higher low V1 for sure. Mount Doji with the cool star says Twitter. So as you can see, Mount Doji, it looks like a higher low V1, and I guess technically it is, right? Today's low did go lower than yesterday's low or Friday's low, but it didn't wash it out by more than a quarter ATR. From here to here's a quarter ATR. A quarter would have to be this kind of washout, similar to the Disney kind of washout. That's a legitimate washout. See the difference compared to Twitter? And Disney, you can see how Twitter's trying to get back up into the value zone, where Disney is fully back up into the value zone. So I really don't like Twitter. Glenn says, testing SMA weekly on S&P 500 again. Testing 200 SMA weekly on the S&P 500. Okay. Yeah, it is. You know, that acts as support when you're above it. But right now, last week it tested it. Right here, we're getting close. So it could be, it could be a crucial point in resistance to the upside. And it does make sense because on the weekly here on the S&P, you have the 200-day moving average above you as resistance, and you also, that dovetails on the daily with the 50 RSI above you as resistance. So you have a confluence of resistance above. Okay. So it looks like the only thing I'm going to be buying is the afternoon or the overnight SPY trade. Everything's looking good. I mean, everything is up today, which is nice. It's important, everybody, if you've had losses this year, try not to try to make them back quickly. I know you want to. I know we all want to, but I'll tell you what. One of the fastest ways to lose a lot of money is to try to make a lot of money quick, right? Let's just take this day by day, trade by trade. Let's be patient, follow rules, not add too many positions at one time, not add too many positions in one day. This market's been very emotional to the upside. When things are going down, everybody wants to sell. When things are going up, everybody wants to buy. It's like manic depressive. People get manic depressive in this market. So let's be aware of that. Just try to be zen in the middle and just wait for a decent setup. Like I said, Walt Disney, I would buy this today. I would buy this today if I didn't already have Walt Disney, because we go below the -1 ATR channel into the value zone, right? We ran into the 50, near the 50 RSI. We had a little breather to the downside. A new group of buyers came in, washed out the low today, reversed back up, closing above the 10-day EMA, at least right now. Although we do have the 50 RSI above us, but I wouldn't worry too much about that. If it had already rejected the 50, then I would not take the trade. But again, this is a pretty good. As a matter of fact, Miko 25, we are going to be talking about V1s, V2s tonight, higher low V1s, return to value ones, and this is an excellent example, excellent teaching example. So I'll be going over this tonight with you. All right, so we have 1 minute. Okay. XLF, Apple's good. Disney's good. Q's are good. Let's look over here. UGL down a little bit, but it has gained back some, so that's good for Steve. Clorox. Oh, now we're down a little bit on Binghe's trade, and Netflix down a little. Up, but off the high. Dr. Jorgensen says, good hike, beautiful day in the desert. Good for a bike ride. All right, Bruce, have a good time. Be safe, my friend. Enjoy the sun, for sure. Okay, so that looks like the end of the day. Nice positive day. Got to be happy for that, right? Grateful anytime there's green on my screen. So I got SPY today, overnight SPY trade at 261.65. All right. SPY trade hasn't been too bad lately, I have to say. knock on wood, it was horrible down through here. I got to tell you. I mean, it was mind-numbingly horrible, but it has been working out pretty well lately. But again, it's a long-term thing. You know, don't get too caught up in the short-term results of this. All right, so there's the new entry. I'll sell that first thing tomorrow. So listen, if anybody has any questions, comments, jokes, observations, please let me know. You know, I'd like to hear about your trading, your positions, anything that's going on with you. You know, you guys always see my trades, but to me, my trades are way less interesting than everyone else's trades. But before I do, I just do want to put out a couple things and let everybody know that I do teach private one-on-one coaching and teaching lessons in the evening time via Skype. I really do like to teach. I've had good success with my clients. You know, I've been trading for 24, almost 25 years now. I've studied with some of the greats in the trading world and authors. I've studied one-on-one with with Stephen Burns. I've studied one-on-one with Dr. Alexander Elder, Kerry Lavorne, Larry Williams. So, you know, in the course that I have, it is 5 sessions, each session somewhere between 2 and 3 hours, but I teach you everything that I've learned from them over the last 24 years, everything I've developed myself in that time. You know, the format of the course is it's live, it's back and forth. And, you know, the nice thing about it is that you can ask questions exactly when you have them. I ask you a lot of questions, but the format is I teach the first half of the lesson. The second half of the lesson, I ask you questions, I throw you curveballs, we do a lot of chart study. I have you break down the charts for me so that I know how to do it. But, you know, what looks good here, this chart looks good, or this chart looks better, which one, what are the pros, what are the cons, where's your entries, where's your exits, you know, how does it look on multiple time frames. But we do a lot of chart study. We go through years of charts so that I can see whether or not you're understanding what I'm teaching you. And all my clients seem to really understand when we're done. So I think it's, you know, it is $1,000. I think it's worth every penny. But you know, in case you're interested, please reach out to me. Usually what I like to do with a new student is I like to have a Skype call with them. It's free. There's no pressure, I promise you, but I just like to get to know you a little bit better, get to know more about your trading history and your goals and your challenges. You can ask me any questions you like as well. And, you know, if it looks like we're going to be a good fit and our schedules shape up, then we can go ahead and schedule those Skype calls out in the future. But, you know, if you have time at home, if it's a good time for you, you know, send me a message. We'll have the Skype call and we'll see what happens from there. But I think you really will enjoy it, and I really do think it's worth every penny. And then secondly, if you could hit the thumbs up button if you liked today's podcast. I mean, if you liked it and you find it valuable, I really would appreciate it if you would hit the thumbs up button before we get out of here. I've had some issues with the YouTube channel. It's not, unfortunately, going out to my subscribers, which is really, really frustrating. I don't know if it's something temporary or if I'm in YouTube jail, but it's been frustrating, and you know, it's hurt the channel. So, you know, if you could, if you liked today's podcast and you like the content, if you could hit the thumbs up button, at the very least, I think that would help something. But we'll see we'll see if it gets resolved in the future. But anyway, thank you so much, everybody, for coming. I really do appreciate it, and it's nice to see you. So, all right, let's take a look and see if we have any other questions or comments. Yeah, that USO in the middle of the day was something, huh? That was an explosion. It moved sideways, held that higher range, and boom, moved on up. So we'll see what happens. We'll see what happens with oil. Hey, John, good to see you. Appreciate you being here. SVXY. SVXY. Boy, I would be scared, John, to short volatility right now. I mean, I really would. you know, if we look at this chart, it looks like it's an inverse chart. You know, we go down, we've come back up. I don't see any particular setups right here, John, on this chart. But what I would be looking for, which is what I'm looking for on a lot of charts right here, would be a test of the bottom. See, if we come back down here, test this bottom, then we would have a double bottom with the bullish divergence. See, we have the low. See how deep these red bars are. See how we rally with green bars. Dr. Alexander Elder calls that breaking the back of the bear. The bear is down. We were able to rally, which breaks the back of the bear. If we could come back down, test this low, then we would have deep red bars. We would have some green bars. If we got back down, tested this low, these red bars, if they were even any red bars, would be very shallow. They would not be as deep as this, I can tell you. And so that would make a double bottom with a bullish divergence, which is one of Dr. Elder's favorite setups. And so, you know, it doesn't matter if we're looking at SVXY, but I guess my honest opinion, John, is shorting volatility right here would really scare me. But you know, if we look at the Dow, you can see we make the low, we rally. If we come back down, make this low here, we'd have a beautiful double bottom MACD divergence. Qs, same thing. Let me show you something. Let me show you on the weekly chart. Let me show you back to 2008. This is on the weekly chart, right? This is right at the lows of the financial crisis. So here was the low, right? Imagine, this looks a little bit like what we're dealing with here, right? I mean, if we look at this chart here, this could very well be what we're going through, right? But we came down. You see how we came off of our low, we had a rally, we went back up and rallied green bars. But then do you see how we came back down and tested this low? But do you see how we tested the low? And just like I was talking about on current charts, we make a low, we rally, we go from deep red to some green, we come back down, test this low. But look here, see how narrow or shallow these red bars are? Even though it's lower than this low, see how deep they are here? This is a double bottom with a bullish divergence. Doesn't mean you can just buy it, but it means that you need some kind of trigger. We'll look at the next week. Beautiful trigger. False breakout to the downside. Nice V2. And that was the bottom, my friends. So if we look here, right, looks similar to what I just showed you, right? Down, 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 down. Rally back up into the value zone with some green. I would... Honestly, I'm very torn in this market. Half of me would be happy if it goes back up. Half of me, I'd like to see it come back down here, test this bottom, have this beautiful double bottom with the bullish divergence. We'd have an ATR divergence, we'd have a MACD divergence, we'd have an RSI divergence, all sorts of divergences. So this is really where I'm looking to enter some positions with size and or sell some more puts, maybe 20-30% protection below on top. So you know, a lot of times we do test bottoms. It's less likely that we're just going to have a V bottom than we're going to have a double bottom, in my opinion. Hey, Andrea, good to see you. Oh, thanks, John. I appreciate that. Thank you for being here as well. Andrea says, hi, everyone. I am flat. Well, thanks for coming, Andrea. Andrea is a student of mine. And Andrea, we still need to do our follow-up lesson, by the way, right? Our follow-up after the session. So get with me when you have some time, and I look forward to doing that with you again. But flat position sounds pretty good right here. I think we're at a kind of a precarious situation. Like I said, we made the low, we rally up into the 50 RSI. We really haven't quite broke through there. So this is a crucial level, in my opinion. Dan says, Andrea, you shouldn't brag about your supply of food. Just kidding, you have a typo. Oh. You shouldn't brag about your type of food. Just kidding, you have a typo. Where's the typo? I don't see the typo. All right, what's happening here after hours? Disney's down a little bit. Gold's down a touch. S&P's down a bit. Oil's down a touch. XLF is flat. Well, I'm very grateful to have this green day. I'm very grateful to have had this nice run up and at least participated partially in this. Again, I think it's very important. Be careful what you read on the news. Just because they say something on CNBC doesn't mean it's going to happen. Have your own plan, position size correctly, and most importantly, if you have had a loss this year, do not try to go after that loss and make it back in a short amount of time. I promise you, more the times than not, it's going to go against you and you're going to end up losing more money. So get a hold of those emotions, kind of be Zen-like, right? I mean, take your entries if you have them, right? And like I said before, even if you don't want to take your entry, but you get a valid entry, you should probably take it. Use a reduced position size, that's totally fine. But, there's a lot of times people want to buy stuff, but there's no signal, but they just kind of want to buy. They don't want to lose out. They have FOMO. That's when you should not buy, is when every fiber in your body wants to buy. More likely when you shouldn't buy is when you should buy is when you don't want to buy. A lot of paradoxes in this world, in this trading world. It's a tough gig. That's why so many people have a tough time for it. But Andrea says, yes, we do. I have been rewatching the recordings. Oh, fantastic. Yeah, please get with me, Andrea. Just send me an email, send me a message on Twitter so we can do that follow-up. I want to get that taken care of and see where you're at, especially, now that you've had some time to do it your own and rewatch the videos. Andrea says, what typo? Yeah, I agree. I didn't see a typo. Kamal says, no trades. Disney looked good, but don't want to buy it with the cruise ships and themed park closed. Yeah, I don't blame you. I would have bought Disney today. Had I not already had the puts. It's a pretty nice higher low V1. Guess we closed below the 1 ATR channel. We rally back in. I don't want to buy on this steep curve here, but now we've had some air taken out and then reverse right back up with another buyer, with another group of buyers. But again, look at the volume on the Dow. Not too high, right? Look at the Qs. Pretty anemic. SPY 888. Well, that's lucky. Just not a whole lot of volume here. Joe said, did you go over XLE? I think I did, but let's take another look. So XLE does have a pretty decent V1 here, Joe. The only reason that I didn't take it was because it didn't close in the value zone. See, we made the low. We did rally, which is good. The people that were fortunate enough to buy here, they had a really nice profit. So when it started to get a little weak, it didn't surprise me at all that they would lock in their profits here, which probably caused it to go down and down. You can see here, though, we did wash out Friday's low and then reverse back up. That's a V1, no doubt about it. It's a pretty sweet looking V1 up against this bar and this nice washout. The reason that I passed on it, Joe, was because it didn't close back up into the value zone. See, when you're underneath the value zone, you're going to have resistance. Well, look here. Exactly, right? It tried to get and immediately got back down in here. It will have easier movement if it can close back up in the value zone, because now it's within one standard deviation away from the mean. But here, I just look at this as like a 200-day moving average or something right above me. If it would have closed above the 1 ATR channel, the negative 1 ATR channel, Joe, I probably would have taken this, because then you would have had a V1, you would have had a bullish engulfing bar, you would have closed in the value zone, you would have closed over the 10-day and the 5-day. Actually, here we rejected the 10-day above. Let's look at it on the weekly. Nothing really on the weekly, but that's the reason why, Joe, that I didn't take it. It is a beautiful V1. It just didn't close in the value zone. That's why. Okay. So did anybody take any trades today at all? Andrew says, Kamal, I agree on Disney. Okay. Yeah, I think we're at a crucial technical level here, either to go back down to test or thrust up and move forward from here. So, um, I feel good about the puts I have. I feel good about the calls I have. They've all worked out pretty well. The nice things too in a weird market like this with options, it gives you a little bit of wriggle room. You don't have to be as precise. But then again, there's just really, I would have taken directional trades here. I would have taken them if there was really anything to take. Joe says, I am in BAC. Okay. When did you get in, Joe? And do you remember when you got in? I'll put you on the board if you'd like to share. No problem if you don't. Miko says, "Thanks, Greg. Talk to you later." Okay, sir. Sounds good. I'm looking forward to our lesson tonight. Definitely look forward to it. 21.99. Look at Joe already in the money like a pro. Joe, if you don't mind sharing, no problem if you don't want to, but what is your trade plan on this now, Joe? Do you have a plan to the upside, the downside? All right, Joe's on the board. Any changes for Bing He out there on any position? Let's look at Bank of America on the weekly. Yeah, it's got the big 200 day up there, or the 200 week, but it's up there a bit for sure. I like that it closed above the 10 day and the 5 day. MACD is positive. Frank says, I'd rather pay more for Disney knowing theaters and parks were open. Yeah, for sure, right? For sure. And you're right, you would pay more. You would pay more. But you know how the market is, Frank. I mean, the market generally is front running the future by 6 months. So, but who knows? You never know. Everything is dangerous. Bing He says SPY is up against the 200 EMA or the 20 EMA. Yes, it certainly is. And also Bing He, a confluence not only of the 20 EMA but also of the 50 RSI. I mean, when I like to buy stocks is when I have a confluence of signals. Well, this right here looks like a confluence of sell signals. I mean, it doesn't have to be, but we're at the 20-day EMA. We're also at the close with the 50 RSI. If we look over here on the week, if we look at the actual S&P index, we are up against the 200 week moving average above it. That's acting as resistance. If we look at the S&P 500 on the week, we have the negative third ATR channel and the 5-week EMA above us. So I agree. That's what I'm saying. This is a bit of a scary location right here, both on the daily and the weekly. Joe says out of BAC, which is Bank of America, right? Yeah, close below 21.10. All right, well, let's put 21.10 under there to remind Joe. I'm sure he doesn't need reminding, but we'll put it under there. So look, he has a plan, right? He has a plan. That's what's important. Plans don't have to be complicated and have all sorts of algorithmic numbers crunched to them. I mean, a good trading plan is get out quickly if you're wrong and stay in if you're right. That's the plan, right? So Joe has a plan. It's a short little stop if he's wrong, and he has some nice upward movement here if he's right. That's all you can do. So it's good. It's a plan. With some of my students, when we go through, I'll say, all right, what's your trading plan? And they may come up with a trading plan to the upside that's totally different than what I taught them. And that's totally fine, right? That is totally fine. I have a client right now in New York that, when we do our lessons and when we do our simulation trades, he's like, on this trade to the upside, I'm going to get out half here and half there. I'm like, fantastic. It's different than what I taught him, but it's fine. You have all sorts of latitude of what you want to do to the upside. What the important part is to the downside is that you get out quickly when you're wrong. To the upside, you can be all sorts of creative. Okie doke. Well, gold up today. Glad for that. New SPY trade here at 261.65. XLF had a nice stay here. I'm looking to get out with the rejection of the 50 RSI or close below the previous day's low. Apple, of course, I have the puts on, or the calls on here. Close below 236 is my stop. Sell the calls for a loss. Not lose the whole premium, but just sell them. If we get up here, reject the 1 ATR channel. That's my plan for the calls. Disney, running out the clock here down to 50. Hopefully, we'll see. Doesn't mean it can't go down to 50. But I like my chances. And the Qs sold the puts down to 130. So that's the combination. So gold, index, some financials, some technology calls, some technology puts, and some Disney puts as well. So I like the combination. Hey, Quad Racer! Good to see you. Haven't seen you for a while. Thank you for coming by. Happy Monday. Hope all is well. I am way late to the party here. Well, better late than never, Quad Racer. Better late than never. Thanks for coming by. Well, listen, if anybody has any final questions or comments or jokes or observations, feel free to put them in the chat. As I kind of end off each day, please try to go out and do something nice for somebody. In this particular time, there's probably a lot of people out there maybe that live alone or don't have a lot of company. Give them a call, check in on them, see how they're doing, see if they need anything. They probably would really, really appreciate it. I mean, all sorts of emotions with the quarantine and everything that's going on. So, try to do something nice for somebody today. Call a friend, just check on them, see how they're doing. And then also, like I mentioned before, if you don't mind, before you check out of here, if you like today's podcast, if you could hit the thumbs up button, it would help the channel. And like I said, with this issue that I'm having with YouTube, every little bit helps. Every little bit helps. So I appreciate it if you could do that. Joe says, have fun on your hike, Greg. Ciao, everyone. Thanks, Joe. So thanks, Joe and Quad Racer and everyone else, and Bing He and Miko25 and Andre and Joe Turner and Steve Burns and Marco and John. Who else we have? We have Kamal, of course, and Dan and Brian and Zach. Good to see you, Jack, and William and Mount Doji and Steve Burns. I already said Steve Burns, but thanks again, bud. Appreciate that. Great video newsletter, by the way, on Steve's channel that he offers his breakdown of the market 3 times a week over at newtraderu.com. I would suggest you go over there and check that out. He has great content, and Bing He And I'm Glenn, of course. Good seeing Glenn. Dr. Jorgensen, Andrea. I think I got everybody. If I didn't get everybody, I apologize. Zach says, thanks, Greg. Have a good night. You too, Zach. All right. Well, that's it. Have a great rest of your day. Do something nice for somebody. Hit the thumbs up button. And have a good evening and a good night's sleep, and stay safe, and wash your hands and all that kind of stuff. But thanks again for coming, everybody, and hope to see you all tomorrow. All right. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.